Hello, this is Charting Man Dan of TheChartGuys, where we teach the little guy and girl how to utilize charts to manage their own trades and investments. What do I mean by the little guy and girl? Well, we just had 2 directives signed halting the implementation of a rule that requires financial advisors to act in the best interests of their client. Let that sink in a little bit. The big wigs on Wall Street can play with your retirement and hard-earned money without your best interests at heart. We currently have hundreds of members taking charge of their financial future, and we would love for you to come check out a free week with no credit card required to see if our services would be beneficial on your path to financial independence as well. What we offer, we have a separate course of over 5 hours in length on when to enter and exit positions. And in terms of what we do daily, we have nightly videos, key levels updated each morning before the bell, 2.5 hours of live daily webcam coverage in the morning and in the afternoon, and over 7 hours of educational videos. All of these links can be found in the description of this video. Come check us out. Thanks for watching. Let's get on to the technical analysis. Hello everyone, I'm going to do the daily and weekly chart for wheat, APH, ACB, OG, IEMC, and EMH. Before I get into the chart, I just want to talk a little bit about what happened recently, because it's kind of a hard concept for newer traders to understand with the psychology of what goes on heading up into news events, especially when the news event is known. And we've seen this play out time and time again. As many of you know, I've been trading the MJ sector in the US for about 7 years at this point, and this happens time and time again, so not trying to sound egotistical or cocky, but we were well aware that there was going to be a sell-off into this news, and that was because of the run-up heading into the news and because it was known, the date was known. So what happened is as soon as the date was announced, we saw a run-up, and as soon as that happens, that's the market saying, okay, there's a date coming up, everybody wants to get in before that date, because in their mindset, they're saying, you know, that's either the time to sell or they want in before the great news. So you have to really understand, first off, that the market you're not smarter than the market. And there are times when you can have information, an example of that, having some information where the market is not really aware of it, and you can use that to advantage. Back a couple years ago, I live in North Carolina, and we had a bill that was getting passed to legalize industrial hemp, and it was really, really quiet, and not even industrial hemp groups in North Carolina knew the details or knew when it was going through. And I was at an industrial hemp trade show, and I met the CEO of hemp, and I had been following his company and trading it for many years at that point, and just got some information that, you know, they were helping push this bill through, and it was very, very likely to pass. So came back with that information and utilized it in the chat room, and we all got in, and we made some nice short-term gains because that news came out and the market was unaware of it. The market was not anticipating that North Carolina was going to legalize industrial hemp, and that's where the company is stationed. So that would be an example where the news event causes a breakout and a rush because it is unknown to the market. And when you have a news event that is known, the date pre in advance, this is the news event getting priced into the market before that ever happens. So the only thing that's left once the news comes is people looking to sell, because everybody that wants to get in has already gotten in. So the buyers dry up and the sellers start to come in. And that's why we pull back so hard, because there's only sellers left. So it's all about supply and demand of shares. And you have to figure Again, we're not smarter than the market. We're not going to be saying like, oh, we'll get in before the news comes out and then the news will hit and everybody will be buying. Everybody's thinking just like you. Everybody wants in before that news, and that's why we see that run-up. So seeing the incredible run-up into last week's news, we were talking about in the last video about where to place your stop losses and utilizing each day of information to have those stop losses level and have those levels picked out and determine where you want to put those levels in terms of how much wiggle room you want to get. So we were all getting out on this day, and the red flag on April 11th as the pullback was coming was breaking the low of the day. We saw the gap up open. We saw the bulls hold on for about 5-10 minutes. And as soon as the low of the day broke, that was a red flag. And then about 5 minutes after that, the dump really started going. And then there was a really nice bounce opportunity from those lows because it was magnified to the downside. We got really oversold and we saw a significant bounce play out. So what has happened since then is we're reaching an equilibrium pattern. After you have such a wide range, and you see this pattern happen on all time frames, on all tickers. We played Tesla's equilibrium pattern on the 5-minute chart just this past Thursday. There was a nice trade to be had there. So it's an equilibrium pattern, which what I mean by that is after a wide range of volatility, you have higher lows and lower highs as the range tightens. And depending on the time frame that you're looking at, it's going to look different. So on the daily chart, we just have 3 candlesticks here. But if I were to zoom in on the hourly, we would see the high, we would see a dump, we would see the high of the bounce, which would be a lower high, and then we would see a higher low from where we currently stand. So on Monday, heading into Monday, Because this pattern is so common, we can utilize it, and of course it doesn't always play out, and in that instance we get stopped out, but this pattern happens so often that we can be looking now on Monday for a play off of this support, the low. I'm looking at APH right now, but we'll look at all these individual names. Some of them are different with the way they're set up. Again, APH is the sector leader for me. It's the strongest on the chart, and so the low of this dump day was 680, and the low of Thursday just now was 708. So we are going to be looking for a bullish entry in the 680 to 690 range, and we're going to be anticipating that a higher low is going to form. There's a couple things that might make it so that that is not going to play out. The first red flag to me is the amount of volume that we saw to the downside on Thursday and the weak close, so that has me a little bit more cautious. But one good thing about what this strategy is going to do is we have our stop loss level very, very clear, and it's the low of the dump day back on Tuesday. So if that low of 680 breaks, we're going to have our stop losses at about 678, and as soon as that level were to break, we would likely see a quick move to the downside, and we would likely be stopped out of the trade. And why we would want to be stopped out of the trade at that point is because we will have our high, our low of the dump, our lower high on the bounce attempt, and then a lower low. So that's a lower high and a lower low, indicating further consolidation is coming. If 680 support holds, it continues to fit within the equilibrium pattern, and we have our high, our low, lower high on the bounce, higher low, and then we'll look to form another lower high as we bounce back up to the upper $7 range. So that is our strategy and game plan on tickers that fit still within their range of Tuesday's wide dump and break day. And let's now look at which names do fit in that, because Weed does not. Weed has already broken to lower lows, and Weed was weaker heading into the news. It was weaker after the news, and it's very weak. We lost 995 support. We only have a couple support levels from the last 3 months. I'm looking down at 972 and then down to 951. So I don't want to be trading Weed right now. I don't like the setup. I don't like the lower highs that continue to form. We now have another lower high and lower low after breaking the triple bottom at 995. So this is one that I'll just keep an eye on and wait for a setup that I like. But as of right now, I don't like this setup, so I wouldn't be trading it. And if you're still in a long position, you're looking at the weekly chart, and it's still a little bit concerning. Just the fact that we have rejected this middle Bollinger Band on the weekly has held for a year pretty much, maybe a little less than that, 10 months or so. But we lost that level, and we have now back tested and rejected from it 3 weeks in a row, trying to get back over that level and being unable to do so. So you can see there's just down at 951 and then 955, and if we lose those levels, I'm then looking in the low $9 range and then down to 851 as a must-hold level. So we have here's the equilibrium pattern here, actually. It's a nice example where we have our high on the breakout, our low of consolidation the next week, lower high on the bounce recovery from that consolidation, higher low, and it's just a tightening range on the weekly time frame. And the Bollinger Bands show you that. These Bollinger Bands are tightening up in a small channel as well. So again, you will see this pattern. If you start utilizing technical analysis, I can look at gold and see this pattern. I can look at oil. I can look at anything. And anytime there's a breakout or a breakdown, this is the most common pattern that is going to form. And that's just the nature and the psychology of trading. So Weed is a little bit weak, and the bulls need to be a bit concerned, and we'll be watching those mid $9 supports. So APH is the sector leader. I have switched. On my screen, I used to watch WEED and look for the sector to follow. I now do that with APH. So again, the volume on Thursday was a bit concerning, so we will be cautious, but we're looking to play off that 680 support on Monday. And that middle Bollinger Band is going to be there as well in the mid to upper $6 range. That's a little bit of a backup support because we did bounce off that level on the dump right off that. So I do like the setup for a low risk and a pretty decent reward trade opportunity on Monday if that were to play out. And the weekly time frame here, we do need to be a bit cautious as it is a bearish reversal candlestick last week. But as long as we consolidate and form a higher low compared to 609 and 601, we continue higher lows and higher highs on the weekly. And why APH has shifted to be the sector leader is because we hit a new all-time high and we broke to higher highs. Whereas you look at Weed and we still have a lower high, and we need to be cautious of lower highs and lower lows. Whereas APH, because we got that higher high, a lot more wiggle room for those bulls to work with. ACB also broke its pattern to the downside, but it can also be a support that's utilized. We did see a bit more of a lower wick on Thursday with bulls buying the dip. So the low of the dump was 268 and the low of Thursday was 267. So that's enough wiggle room, a penny. I'll consider that a double bottom. So if looking to make an entry on Monday, we can be utilizing the stop loss level just under 267. And again, I always leave a couple pennies of wiggle room, but watching to see if the bulls can defend this level, because if they can't, the next support that we're looking down at is going to be down here at 253, the consolidation low before the breakout occurred. So bulls really want to hold 267 on ACB. And again, we have to be cautious on the weekly because it's a big bearish reversal candlestick, and it does indicate that some more consolidation is likely. So these bulls need to form bullish reversal candlesticks on Monday, holding their key supports. OGI, and that is not OGI, there's OGI. So OGI is also a heads up, and I wouldn't be playing this one on the bounce in the same setup as the other one, as APH, and that's because 280, we broke it down to 278, increase in bear volume, and a close at the low of the day. So that tells me that we are very likely to see further pullback, and the support after 278 to be looking at is down at 265 and 254. So a little increase in bear volume, and overall OGI, we know it's trying to recover from a big PR disaster. So personally, again, if I'm going to be looking for charts that I want to play, I want the setup to be in my favor. I want it to be bullish, and I'm looking to APH for that because right now OGI doesn't really compare in terms of still setting a lower high on the weekly, rejecting from the upper Bollinger Band resistance, closing at the low of the week on some pretty high volume. So OGI have a couple support levels down in the mid $2 range, but the close near the low of the day, oftentimes you get a lot of indication on momentum by where we close. And you see a close at the low of the day, you know instantly that the odds are more likely for continuation to the downside the following day, and the same thing as if you close at the high. So again, technical analysis is all about odds and putting the odds in your favor. We don't know what's going to happen, but we know what is more likely in certain scenarios because how it has played out time and time and time again. So definitely utilizing these sell the news events and watching how the market psychology interacts with these in the MJ sector for the past 7 years had us very prepared for this pullback that was coming. So OGI, weak, close at the low and anticipating further downside. EMC is worth keeping an eye on because we are seeing a bit of recovery now where we have our higher low and higher high in place on this bounce recovery after being bearish for so long. So support here on EMC is 271, and the bulls did buy the dip a bit there with that decent lower wick. And we have a very clear resistance level of 303. It's a double top the past 2 days. So if we can hold 271 on Monday and Tuesday to start the week, that will show some continued strength, but we have to be cautious because if we cannot hold those levels, we're looking at 262 and then there's a gap to 250. I would be looking for a bullish entry opportunity if we continue to pull back, utilizing this higher low support of 216 and 217. So if we were to drop down into the low $2 range, make a bullish entry, exit if those levels were to break. So again, it's always about utilizing support levels to gauge risk to reward. So if I were, let's say we make a break of 271, a bearish break to the lowest price we've seen on this pullback, and we're sitting at 255. And I'm thinking, okay, do I want to make a bullish entry at 255? And the answer to me is no, because that's floating right in between a bunch of key levels, and there's a lot of space to the downside in terms of before we would hit the next key support level. So I always want to be making an entry near a key support level so that if that support level breaks, that's my clear exit signal and the losses are minimal. So keeping an eye on EMC 271 and then 250, and the bulls need to break 303, that little double top, to try and see some continuation. So a big upper wick of profit taking on EMC after trying to see a confirmation candlestick of this bullish reversal candlestick from last week. So now it's up to the bulls to continue forming higher lows and higher highs now that we have broken the downtrend. And the question is going to be, is this 271 level our higher low established? Or do we need to pull back a bit more and wait for a new higher low? And again, Monday is going to be very telling on a lot of these names as to how much downside bearish momentum there still is. We had that profit-taking start on Thursday. Well, we had it start on Tuesday, and then we saw more of it on Thursday. So there are people going to be looking to buy the dip. They're just not going to be looking to buy the top as news is just coming out and everybody else is looking to sell. EMH is also pulling back a decent lower wick off of 147 support, and we filled the gap to the downside here at 149. So if 147 can hold, that's our new higher low. I like the consolidation that's going on here because although we've hit lower highs and lower lows each day, it's on declining volume. That's exactly what the bulls want to see. They want to see bears running out of momentum to the downside. So if we can hold 147, that's a support level to be making plays based off of, and the weekly time frame is also a bearish reversal candlestick, so we do need to be cautious. But again, EMH on the weekly time frame is ahead of the game of a lot of these stocks because we did get a higher high and a nice bull break above 190. So similar scenario to APH. Any name that has broken its high of November instantly gets put in a stronger technical category than names that have not, because it's the difference between a lower high or a higher high, which makes all the difference in the world. So EMH worth keeping an eye on as well. 147 support. If that level were to break, we're looking down at 134, so a good amount of downside if that level were to break, which is why utilizing stop loss levels is so important. So just to wrap up again, heading into this next week, we're watching volume to see how much downside momentum we still have in the sector. We're watching what APH does. If APH breaks 680 support, we will be looking for a good amount of weakness across the sector. And if 680 breaks, that means back off, wait for the bulls to establish a new level of support, and we'll be looking for a bullish reversal candlestick on the daily time frame to indicate that that consolidation is potentially done. But as we head into Monday now, we are going to be looking for a bullish entry on APH utilizing 680 support, and we'll have to see how we open heading into Monday. So feel free to ask any questions. Again, I love the psychology of the market. It is very important to understand, and that's why it has us prepared on these sell the news events. And you can see people that aren't familiar with trading stocks and they're new here and they don't have much history to be going off of in terms of their memory banks, but you just see them in the forums and in the chat rooms. What's the bad news? Why are we going down? And that's really at no fault to them. You know, you think logically that's what would be going on. You want to see bullish news, reaction to news if it's not bad news, but that's not how the market works, and the market is already ahead of us looking into the future when a news event is known. So I appreciate you watching. Feel free to ask any questions, and we will see you in the near future.